and welcome to what's turning out to be pretty calm Mondays. I had the crazy Mondays for a while, and now everything's super chill. But at least we finally broke the low of a day before us, which is the first time in a really long time. It's like 9 days or something. So let's see if that can continue. But as always, what we're doing here is we are taking your guys' requests, questions, that kind of thing. Whatever it is that you want to talk about when it comes to markets, certainly we can do that. So make sure you're asking questions. I've got the chat open right here. But in the meantime, we will just go and take a look here at. We're going to share the screen and we're going to do this. We're going to go like that. Bam. So this is what I was talking about. There was 1, 2, 3, 4, 5, 6, 7, 8, 9 days of every low being higher than the low before it. If that's not a record, it has to be close, right? That's pretty wild, right? Just a higher low after higher low the whole way up. Today finally broke that trend. Let's see if we can actually close red or not, but finally broke that trend. I think at some point it wouldn't be the worst thing in the world if we came back to test this 613, which is the breakout area. I think the new all-time high back then was 613.23. So if we come back and pull back into that zone and find buyers in there, I think that's overwhelmingly a good thing. You can't have markets just blast up forever. We're still up 30% off the lows with pretty much no rest or no pullback or anything like that. At some point, again, there has to be some sort of rest that takes place. So is today the beginning of a small pullback? Maybe. I don't know if I'd bet on that, but that might be the case. So look at the Qs, a little bit weaker. Right? They've sold off a little bit more, tried to close this gap a little bit, and hasn't had that crazy push. The reason that is occurring more on the SPY is if you look at the RSP, which I always just like to take a second to explain for new people. The RSP has the exact same stocks as the S&P 500. However, they are not cap weighted, so it doesn't mean that your Mag 7 doesn't make up the majority of the index. Each company has the same weight as every other company, whether you're a massive conglomerate or a little tiny guy. Every company has the same side of that. So, meaning it's just a better look of what is the average large cap stock doing. Well, you look at the RSP. The average large cap stock is still doing very well. Not quite at all-time highs, but it's still doing well. And even though it's still off its lows, it's not as far off its lows as the SPY. So again, RSP equal weight sectors. I think QQQE is one as well. I love these equal weighted ETFs because people say, oh, the market is up and the market is down. And the question I always ask myself is Apple, Microsoft, Meta, Nvidia, are all these up and maybe every other stock in the market is down, or vice versa, right? Do we have every stock in the world up, but maybe those couple are down? I don't care, but it's good to have that kind of more internal information to say, hey, what's actually moving in the market? So it's a good way to get into the market. Now, again, make sure you're requesting whatever it is that you guys want to see. In the meantime, we'll take a look at the heat map. You can see overall pink. So gray just means 0.5% up or down. Red, or this pink, means between, say, 0.5% to 1.5% up or down. The only thing that's kind of a glaring red is Tesla here, and a glaring green is Palantir, and everything else is just up or down a very little bit. So that's what makes for a pretty inconsequential day. Right, if you look at Tesla, gap down off the open, and then ever since then has actually been trying to grind a little bit higher. This is on Elon and Trump continuing to fight back and forth. And then Palantir, actually a nice looking breakout. This is what I want to see the overall market do, in which you have a break of all-time highs, which was right here on Palantir, comes back to that all-time high price, and there are buyers in that zone, and then it pushes up. That's what I want to have happen here on the SPY, just to show that the people that are, there's kind of two reasons that prior resistance can act as support, and I think is healthy when it does. One is if you have a pullback, and one of the factors is people who missed the initial buy, right? So if you missed on Palantir is probably a good example. So let's say you wanted to buy it at this kind of 133 when it broke to new all-time highs. If you didn't, and it ran all the way here to 150, when it comes back to 133, you may start buying. The other thing is people who shorted all-time highs. If you short all-time highs right here, and then they come back, then when you have that same kind of reversal, that can be a bit of an issue as well. So you get that nice push up as well. So you're like, I'm short from here, and now I was underwater for a long period of time, but now I'm flat and I'm back to even. Well, I'll buy then as well. So that's what we're looking for here on the SPY. Same with the Qs, because I noticed that was a question there as well. But the Qs, I'm looking bullish, obviously still. Short-term overextended. I would love to see a pullback into 541. I think that's overall a good thing if we can do that. So let's see if we actually end up doing that. But I think that would just be a nice, healthy, right, pullback. Maybe not all the way there, but 544 or something like that. And then we see buyers. I think that's good. But I went through this, and if people want, I could do it again. But I went through this history right when we broke all-time highs. So I went back. There's been like 5 bear markets in the last few years. Just go back to all of those bear markets and take a look and say, well, what happened? If, for example, you have an all-time high in which you had a V-shaped recovery, I think we can all think of it, what I'm trying to insinuate to, right? Back here, this was the all-time high break after a V-shaped recovery. That was COVID. You see, never really that clear, right? We broke all-time highs in through here, came in, retest that zone, and then moved. And then you can look at, okay, well, what happened? Right? It's pretty easy to go back. You can go back to all the way till 2008 pretty easily. So here's the all-time high back in the, I don't know, call it interest rate scare or the Russia-Ukraine war, whatever it is. We broke up, and then we had a quick pullback, and then off to the races. So that's what I'm looking for here as well in the market. Just seems very characteristic where maybe people who were buying the all-time highs, they ended up dumping. Maybe that's what's going on there. Walmart's a really good look. It looks very tight here against Walmart. So we have these, you can see I already have this $100 level kind of noted because it was highs back here, and then back here, and then over here, and then over here, and then again over here, and then over here, right? So $100 seems to be like a brick wall for Walmart. I haven't been looking at the insider buyer sells. That kind of, to me, looks like that could be what's going on here, where maybe there's some people looking to get into or out of, trying to get into or out of Walmart. They're trying to sell as it gets to $100, but through $100, that might be interesting, and it might be, it might make sense to actually do it if the market is going to be weakened a little bit. If I'm right and the market's going to kind of pull back or chop around here, then Walmart is definitely one that could do well, because kind of speaking, Walmart is corrective in nature to the overall market, where the idea is if the economy weakens, it's almost more people will shop at Walmart than if you're in a really strong economy. Makes sense to me, right? URGN. I don't think that's the thing. URGN. Oh, there it is. No, I just typed it wrong. Wow, that's an interesting chart. From $3 up to 13, and then a sideways consolidation. That part of this looks nice. The rest of this is just kind of sideways consolidation, just chop back and forth. You can hide that too. However, this is just a nice, if you isolate this area of the chart, which is one of those you know, it's gap down on some kind of sort of news, reverse that. I like when stocks really quickly reverse gap downs like this, because anyone who's shorted into the gap, because if you have a gap down like that, it's some sort of bad news. I don't know what it is. I'm not a news guy, I don't really care. But uh, that bad news reversing very quickly, some buyers are in there for sure. Maybe shorts, maybe caught a little off guard, shorting into this gap and this gap. So if this holds right here, it's a clean looking bull flag. The beauty of bull flags right here is that you don't need to be a technician to trade them. You don't need to be super into technical analysis to realize why that works, right? Bull flag is just simply stock moves up, no huge aggressive sellers look to take profits in that stock go up, right? So stock just goes sideways for a while. Nobody's buying it here after this big push up, and no one's really selling it here. So you have these sideways consolidations. When that continues, then you can have nice little moves from there. So, right, that would be kind of a buy today if it closes strong, and then a stop at 257 if that's what you want to do. LXHL. Or I don't know. Do that in caps. I don't know what that. Wint. WINT. Uh, this company will be bankrupt soon at some point. Anytime you scroll back, okay, what's this? 2 billion? 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah. So Wint was. Do I have to do technical analysis on this chart? do you really want to know the technical analysis view of something down from $2 billion a share to 81 cents a share? There's no way that this is a fundamentally strong company or is doing anything very much interesting. This seems like this is a scam, right? From a high of $7.5 billion a share to 81 cents. For those who don't know, just to summarize, that it's never been that much. What's happened is to stay listed on the exchange, you have to stay over a buck. To stay over a buck, if your company is really bad and just hemorrhaging money, you have to sell. You have to do reverse splits. So they just do reverse splits over and over and over again. So that's why the split adjusted looks so crazy. This company is likely bankrupt very soon. Sorry. And even if it does go up, it's not going up to $1,000 a share. They may have to do yet another reverse split to stay listed. What is it? MULN is the perfect example of this one. I am shocked. Somebody should go to jail for this one. A high of, I think I looked this up, it was 350 quintillion a share, and now it's worth 25 cents. And it's because every time they do a reverse split to stay listed, who's going to buy this thing? This is a daily chart. So in May 2024, so 1 year ago, this was worth $650,000 a share. Wait, no, sorry, 650 million a share. So just reverse split, crash, reverse split, crash, reverse split, crash, right? And yes, every now and then it will do these crazy moves where it'll go from $5 to like 15, and that's amazing, and then all the way back down. So this has been the easiest short on the street. So again, someone should go to jail for that, I think. This Mira, this one looks a little bit better, although it's not doing anything. And that's almost as bad, because at least if you're in a company that's tanking and you get stopped out, you get stopped out. And that's kind of unfortunate. That's, it's not what you want to have happen, is that you get stopped out. But at least you're stopped out, you got your money back, and you can invest it somewhere else. These stocks really annoy me, the ones that haven't gone anywhere for a year. So to trade something like this, you either need to wait for price to tell you it's time to trade it, which for me would be a break of like $1.50, or you need some major news event that is coming down the pipe and it's going to hit relatively soon, and you know that, and then you can take a trade based off of that news event that's coming out. Because this is just doing nothing. hemorrhaging money. So take a look at how much runway they have in their finances. This, knowing this is a pharmaceutical company, knowing that it's burning that much money, makes me think this is a pre-trial company, which can offer the most explosive potential returns in exchange for a ton of risk, right? If whatever drug they're working on is going to be coming out soon, then maybe you can take a bet based off of that. Otherwise, eventually it's going to bleed back down to zero, near zero, on its way to kind of thing. AIRO. This is brand new. Aerospace and defense, I like that as a sector, because if you just look at ITA, which is the defense sector, this has been a crazy chart. This is where it broke the all-time highs after the tariff tantrum, right here. Not just a couple days ago, way back in May. So it just had a quick drop and then ripped through that potential low. So I like defense. So when I see AIRO, it says it's in aerospace and defense as a technical group. That's interesting to me. Nice little push up and then sideways consolidation here. So this one becomes pretty easy, right? You've got some clean support here, obviously at 20 to 21 bucks. So if you're above 20, that's some support you can play. If you lose that 20, I think it's time to go after that. And until then, you're just kind of chopping around, consolidating sideways, looking for something to occur. And just make sure, right, just like I mentioned with the other one, you don't wait forever on that. All right. So yeah, so if this is going to break, potentially it breaks this downtrend line, and then you go from there. So I'm just making a note on that one because I kind of like it, right? If it holds around 21 bucks, that's great. And then if it's going to push up after that, then I just love trades that I know exactly where I'm wrong, right? At close under 20 bucks, it's probably time to go. I just made a note. I got to figure out a little bit more what they do. But again, defense is great in this area. Mooding. This is just a meme coin. I don't know. All the meme coins kind of look the same right now. Right? You look at Farcoin. It's got this nice cup and handle. You look at Pepe. Right? Nice little cup and then a potential little handle here. All of these things look exactly the same, right? So the yes, this idea is if Solana can get going, maybe these meme stocks also get going, but all of them look the same. What's another one? Peanut. I don't know. All of these have this kind of found a bottom somewhere around February, March, nice little pop up, and now they've been grinding back down. That creates that kind of cup and handle look. So I think you just look at Solana. If Solana gets going, then maybe you can have some of these meme stocks do well, because you see Solana's got kind of the same look, right? Nice little sideways consolidation and then a breakout. So if the Solana starts to drift towards high, then maybe you can get a breakout in some of these other meme coins. But until then, you're probably kind of stuck. There's dog with hat or here, right? Nice little cup and handle. They all kind of look pretty close here. So just be careful with those until we get that breakout in Solana, which looks like it's a long time coming. Something's going on here right now with the Qs. Holy. So we're bleeding down there pretty good on the Qs. So let's take a look here. I've got an eye out because yeah, we go see what Walter Bloomberg says. Something sold off there pretty quickly. That was a big sell. G-Stat. I did Walmart above there. I'll just do it quickly just because someone asked. I like it over 100. If it can get through 100 until then, it's just look at the amount of times 100's been resistance. So I want to prove that it can get over 100. So G-Stat, this is one of those solar guys, space dudes. The fact that it's underperforming all the other space dudes makes me a little bit worried. I want to generally go for best in breed, right? ASTS, RKLB. These are the top space dudes out there. GSAT is looking okay, but underperforming pretty dramatically. So I want to see the other thing occur, right? I just want to give me the best guys out there. Give me the strongest names. Those are the ones that I want to participate with, right? The biggest kind of best names in each individual sector. So I do like the space sector. I think it looks good. I think this really isn't even that bad looking of a name. It's done this kind of cup handle, smiley face type of look. However, it's the way I look at it is that if you can't rally when everyone else is rallying, that gets me a little bit worried. I just ask myself why, right? Why can't, say for example, all of the weed stocks were rallying and you had a weed stock that wasn't rallying, then I'm always like, why, because if you can't rally with the rest of them, that's why I'm distracted here. We're really bleeding here. There's the cues. But yeah, with this GSAT, if you can't rally when the rest of them are rallying, why? Now, it did have a nice little push up here, but it's nowhere near that prior highs. Now, long term, right, zoom out to this guy on a weekly chart, and this might be why, is we're stuck in this range. We can't get moving in either direction in any way. We are stuck between this, right, 42 and 14, and until we break one of those, we could just be, right, this is where we live now, right? We live between 42 and 14. And like I talked about, I'm adverse to dead money as I am adverse to losing money. I think I'm probably more adverse to dead money. If I buy a stock, and I buy a stock at $20, and that it just sits at $20 for a year, then not only did I lose the money on owning that stock, or say I sell it at 19 a year later, not only did I lose the dollar a share, but I lost the year or so of absolutely nothing, not participating, putting that money in any other stock that is participating. So you could have had anything. That's right, we're hitting new all-time highs. We could have had anything. So that's always my worry when it comes to a stock that's in a range like this. So for me, what I would do is, if I really like this company, I would kind of set an alert at the low end of the range and set an alert at the high end of the range, and then move on with my life. Because one of those things will happen. So I'm actually just doing that right now because I actually like the look of it, right? But you can just right click and you say, here, alert me at 43 or alert me at 15. And then maybe if it gets to 15, you buy it. And if it holds, and if it gets to 43, then you sell it and you kind of move on, right? Bull, full disclosure, right? I'll always do this when I say this. I bought some Webull today. I actually made a video about it. It's on my StockTwits thread or whatever. One of the systems that I have had me buy it right here around 2:30 today as it sold off. So I just always want to say that is the now, just so you know, right? I'm talking my book here, but I like this. I like the fact that ignore this, right? Probably not in our, in years and years and years getting back to like 50 or $80. So just ignore that. Just pretend that never happened. That was a little bit of craziness, a little bit of euphoria after the pre-market or after the IPO, right? Got a little nuts there after IPO. So just, make sure that you get that. You know, just say, hey, not for me. But if you look recently, I don't know why that went through. Let's get rid of that. If, for example, you like this look here, then I think you trade it. Not if you think, hey, I'm going to buy it and it's going to go back up to this price. So we've been consolidating between 10 and 11 bucks for a long time. So through 11 bucks, I like that it came back and kind of retested the high end of this base. Just delete this and make it a little bit easier for you guys to see. This purple line was where the system told me to get in, so I just got in a little under that. I like that it just stopped going down. It bled from 80 bucks down to here, but then it stopped. It rested. Anytime I can get these low bases, I like them, because if you buy them as they break out, then you just know right where you're wrong. And generally speaking, these low bases can be caused by people who are value investors. They looked at Webull at 80 bucks and laughed and said, I've done the discounted cash flow boring nonsense, and that's hilarious to me. But at 10 bucks, 11 bucks, that's where I think it's a good value. I can start buying it there. And the reason that usually causes these low bases is because value investors aren't going to chase momentum. They've done their math, they've done their business analysis, and they say, hey, it's worth about this. So we can see this technically showing up on the chart because when we're in this range, they've done the work, because they'll just buy, okay, it's around 1050, that's where we think it's good, let's buy it. Okay, it's around 1050, that's where we think it's good, we'll buy it. And they just go like that. So the idea is that if we can hold that zone, then I like it, right? If we break out of that zone to the downside, I know my stop is worst case at like 10 bucks. So I'm in at like 12.50. I know my worst case at 10 bucks. So then the question is, do I just think we can get to these prior highs? If so, then that's trade I'm going to take, right? And that's as simple as I think about it, where I just want, hey, give me an example of a good risk reward and some sort of reason for the play. And the reason for this play is, you look at Robinhood, right? If you say this company is 1/10 of Robinhood, this trend has been crazy. So if Bull can just kind of capture some of this magic from Robinhood and it gets back to like, I don't know, 20 bucks, I'm buying it at 12, I'm selling it at 20, happy camper. I don't think it's going back to 80. Netflix, hard to do a TA on something that's just hitting a new all-time high after all-time high. Now, I owned this one last month. I exited this month. Again, I'm a quant, so I run systems. They tell me what to buy. My system told me to buy Webull at that price, so I did. The thing that got me, I think, the system to kick me out of Netflix was just too much, too fast in a crazy trend. And we want to be involved in crazy trends, but when they start to get extended like this, we want to kind of take our money and move on. So Netflix, I think, is doing so well because you can't tariff. Well, I'm sure they'll try. It's a tariff-resistant stock. We could put it that way. They just make shows. Also, I think it's a recession-resistant stock, you could say as well, in which you're not going to cancel your Netflix subscription. Right? I'm a dad. I got 2 young kids. It's the only thing that keeps me sane sometimes, is being able to put on Netflix Kids and just have them not, right? Just chill out and just watch Trash Truck for a minute. So it's a very cheap way to get a lot of entertainment. So I think that's resistant as well. So I wouldn't bet against it, but I'm not going to buy it after it's gone from 150 to 1500 in like a straight line. And then also, even just since the tariff tantrum, it's doubled in price. That to me is really hard to do. So wouldn't buy it, wouldn't sell it. L8. No, that's still not a shield. SHLD. Oh, the defense. Yeah, that's another way Whoa, that one looks even better. Wow. Oh, thanks for that. I'm actually going to add that to my list here. Someone pointed out this. So this SHLD is a defense tech ETF. So thank you. So I have a lot of ETFs, as you guys can see. This is my list of things that I go through every night, from crypto to FX to international equities, commodities. I go through all this. So you've now added that to my list. Holy smokes, that's an amazing one. I just used ITA as defense. That looks even better. Again, wouldn't buy that up here, but it just shows the strength of the industry. This Oscar Health, I remember looking at this line I have up here means I looked at it before. Just range bound. And again, I just hate range bound names. There's just so many good names out there that this one is completely range bound. Makes me not that interested on. I want to see something a little bit more interesting happen. So the fact that it's not moving at all, it's in the middle of a range, it's fine. It's just nothing there that I care about. And I encourage you guys, right, just look at your companies, and if they're not moving, consider maybe doing something else with them, maybe, right? If your companies are moving, great, good for you. If your companies are not moving, maybe consider something else. Not saying that you have to by any means, but I'm not your dad. I just think a lot of people get very committed, we could say, to individual names, and then they don't kind of branch out to, they get stuck, right? And then they're in there and they're reading reasons they should be long this company, and oh, this drug that they're going to release is almost out, and then that will change, and then they end up just like getting committed, getting married to this company that's just not doing anything. So again, it's opportunity cost, right? Opportunity cost, big deal. Yeah, this HCTI, this is another awful company that will, just keeps reverse splitting on its way down, 23 cents. It's going to have to do something to get off that. It has to get over $1, or they're going to be delisted. That's just the nature of it. So this is, 2 cents. Yeah, so this is probably most definitely going to be delisted or go to zero. Not something I would touch. If you do, treat it like a call option where you expect to lose everything, because it was at half a cent down here. And it's still listed on the NASDAQ, so it can't be. So they have to fix their company to be listed on the NASDAQ, or they'll get kicked off. And that's just going to be even worse than this company is. AQST looking good, the person says. So I have a drawing here, I guess. A nice breakout and a retest of the zone, and then moving higher. This is a better looking chart. It is a little bit range bound, but has broken some recent highs. It has some other highs up around 550. So that might be something to take a look at. But yeah, it's a decent little look there. So if it continues, great, but it's kind of just right under this prior high right here. These U-shaped patterns are always really interesting when you get them, right? Here's one to the downside where it's what causes a cup and handle. These kind of views of, okay, it's in an uptrend, and then now it's in a downtrend, and when it breaks that area, there's generally a lot of stop losses, things like that it has to deal with. So, but yeah, it looks okay. DFDV. Again, make sure you guys are asking away. DFDV, DeFi deployment. You can see I have an anchor view app drawn from this gap up time. Came back and it touched that perfectly and then bounced. DeFi, that makes me think you just have to keep an eye on like Ethereum, Solana, things like that. If those things can get going, then maybe you're going to have a move here. If they can't, then it doesn't really matter, right? So the problem is with all of these companies getting into crypto, it feels so very toppy. If we didn't just have a bear market, I don't know what I would do. It feels so very toppy that we have these companies that are flirting with just, hey, my company's bad. Let's do a Bitcoin treasury. And oh, I can't make any money doing anything. Let's do a Bitcoin treasury. And it feels so insanely toppy. I don't know if people here were here for Long Island blockchain, but that was a company that decided that they were just going to, it was a Long Island iced tea company that they were going to do blockchain stuff. This was back, I think, 2018 when all this started. And that kind of marked a major top. Their literal plan was, we're going to put blockchain in the name. We're going to use blockchain to distribute our iced tea, and the stock like 5x'd or 10x'd in a day. This feels a lot like that, where if everyone's doing a crypto treasury now, doesn't feel bullish to me. So yeah, any of these DeFi companies that come up, things like that, again, I get worried. So again, hopefully things do great, but it's worrisome for sure. Especially that we haven't gotten, so Solana looks okay, Bitcoin looks okay, Ethereum looks okay. None of these things are like super exciting to me. MYO. Likely a zero. Not as much of a zero as a lot of the other ones out there, but broke a major base. You can just see this range it had here for ages. Now broke down under that range, bleeding lower. Has lows of 37 cents that it could definitely contribute and deal with. I would want to see this before I'd even be remotely interested. I would want to see this retake that 270 area and then start to push higher. And until then, I wouldn't be interested in this at all. Anything that's broken and violated such a major support zone has to then prove to me that it's going to retake this zone in order to get interesting. And then sometimes they can do it. I always use ASTS as an example because it was there was this huge support zone, broke that, and then just came back days later just with this massive green candle and then continued. And that to me was very bullish sign that you had a great potential trade on your hand with ASTS, because they use that undercut of support as a loading zone, a place to get involved, a place to buy things, not a, oh, support broke, let me leave. And with this MYO, the second support broke, everyone's running for the door, like, get me out of here. Even since support broke, this thing's dropped like 25%. BBAI. So yeah, BBAI it goes into the camp of, I wouldn't bet against it, but I'm not going to buy it here. This breakout of, say, $5, resistance, resistance, resistance back here, and then a little bit of resistance here. The break of 5, definitely, hindsight, seems like it was the move. Now that it's shot up to 8 right away, I'm not super jazzed to get into it right now. So, it's not a trade I'm going to take really aggressively kind of right here, right now. However, if you can get some pullbacks, right? Maybe if it pulls back, you have this little gap here. So if it pulls back into that gap at like $6 or something, and then finds some support and moves higher. Interesting look. A lot of these de-SPAC, anytime you see like an IPO line that looks like that, that means it was a SPAC at some point. Most of these de-SPACs did this crater. The ones that kind of come back and they look like they're getting, they're retracing like half of that sell-off. Quite often, I've seen them hit all-time highs and then maybe go a little bit further. Not saying that that's going to happen to this one, but it could. Right? It's not crazy. 14 or 15 is all-time highs. That's about a double from here. So again, it could. I'm not expecting it to, but it could. So yeah, that's a potential trade that you could make there. Just quick, going back to the queues while you guys are asking questions. Hey, whatever bad thing came out, that was quickly reversed and pushed higher. So I'll take it. Seems like some kind of bad news happened there. I don't know. Maybe Trump said something. But looks like we completely retraced that sell off. And now we're back up. RUN, Sunrun. Yeesh. So Sunrun's interesting because it's gap down, ran as much as it could, gap down again, ran as much as it could. This is a weird chart. It may just be indicative of somebody around here. We talked about this on Webull, I think it was. We talked about it on Webull where when value investors step in, they will just keep it at a level and not let it drift lower. That could be what's happening here, right? Everyone could have just decided, right, Sunrun is worth $6-7, and I'm just going to buy it at $6-7, and away you go. Seems just like a rough tailwind, rough administration to to deal in the solar space. Plus, it's this industry that's just got commoditized to death. However, the gap down and running and the gap down and ripping, that happening twice, that's pretty compelling to me. So I would keep an eye on this one. In fact, I'm going to go over here and I'm going to add that to my list. It just shows that there's somewhere that we could have a little bit of a push. We could have a little bit of rip from there. Trump announced 25% tariff on Japan and South Korea. Okay. Short Samsung. Market got over it quickly. Yeah, well, I think everything's just priced in that they'll back out every time. VSH. This is kind of the definition of stuck in a range. I'm not interested. Right? Yes, it's bounced pretty well, but it's back inside this range. If you zoom out in the long run, it's got a bit of a double bottom, you could say, 2020 and here. Highs are still a long way away, but you've just pushed 60% off its lows just to get back to this consolidation right here. That to me is there's just so many better things to play. Again, I always just look at it as I've got a portfolio. I've got a certain amount of money, and then the sideways consolidation that's going on in a lot of these other names below all-time highs. I'm trying to think what we saw. Walmart, right? Walmart. I look at this chart. I look at, there's just so many charts out there that are looking well, are looking nice. MindMed to me is one that's interesting, right? Cup and handle. I've on the stock twits, I've been talking about this F-Tech that I've been in from like right here, and it's just ripping. There's so many interesting names going on that when I see like a VSH, I just like, why would I don't see a reason why I would get involved here. If anything, it might fade a little bit off of this area, and I could be wrong, right? Again, I'm not a guru, right? I'm not a master. I just look at it and I say, okay, the market's at all-time highs. There's so many sectors ripping. Give me sectors that are looking good or looking like they're going to rip, and then I'll be more interested than anything, right? This is what the overall market's doing. If your stock's not ripping with the overall market, I think a little bit worrisome. So while we have the market up, yeah, it got over that pretty quickly if that was the news. Let's go and look at the news, see what. Yeah. Effective August 1st for those. I'm trying to think, like, Japanese companies, like what, Honda, Nintendo, might be an interesting one. I think you can trade Nintendo, but it's on like the pinks. MRSN. Another pretty horrible company. And I know I'm harsh, right? I get it. But it's important to note that if your company has gone from $29 to 31 cents, down 99.9%, it's bad. It's a bad company. It's probably going to go bankrupt. If we believe in capitalism, it probably should go bankrupt. I'm not one that's like, dealing with the whole AMC short sellers are ruining my company. No, AMC's down 99% because it's bad, right? It's probably never going back, right? The short sellers didn't ruin AMC. The management of a company that made it a bad company, they ruined AMC. So when I look at these different companies, this MRSN, it wasn't short sellers that tanked this thing from $29 to 29 cents or down 99%. It's the company. And unless the company can figure out a way to fix it. Now, I see this as therapeutics company. So they probably had bad results of some drug they're making. The chart looks bad because the company is bad. So for the chart to look good, the company would have to be good. So you need to learn more about those companies. There's, especially when it comes to things like pharmaceuticals and biotechs and therapeutics and things like that, it's important to know where technical analysis is good and where technical analysis is bad. Unless you're trying to do some weird hippie voodoo stuff, technical analysis does primarily identifies trend, and it identifies where buyers and sellers are. That's about it, right? And again, I'm a technician, right? So I believe that technical analysis is the inferior or superior way to trade. That and quantitative trading. That's why I'm a quant. However, if your company is losing money and your company can't make a therapeutics, whatever it is, they can't come out with a FDA approval on whatever dealio they're trying to make, it doesn't matter what the chart looks like. Now, usually the chart will line up, the chart will look bad, and the company will be bad. But even if it's not the chart's fault, right? It's the company's fault, and it'll probably continue to be that way. So we got another few minutes, guys. If there's anything that we want to look at, I want to check out Tesla here real quick. Just kind of consolidating sideways here. Nothing really crazy going on in the Tesla space. The reason I want to look at Tesla today is it's always really good to go to the heat map and look at the most red and the most green. The most red being Tesla, the most green being Palantir, and see what your leaders are looking at or what your laggards are looking at. And Roblox doing really well, which is just, this chart is just insane. Roblox. Right, with all these charts that look like this is why I don't want to be in range bound's name. This is just crazy, from $50 up to 110 in pretty much a straight line. So VSH, we went through that. So again, any more questions, let me know. Otherwise, you're going to have to hear me waffle on about the stuff that I'm interested in. Oh, SYM. Yeah, SYM is just crazy. Automation, robotics, all of those look great. SYM is one of the rare ones that you can see that this was a SPAC. And then when it de-SPAC'd, it didn't crash. It actually went up a bit. But this falls into the nice looking chart, It's a little overdone for here, right? From 28 to 46 in pretty much a straight line. So I'm not going to buy it up here. I certainly wouldn't short it up here. There's just nothing really I can do for it. You just kind of you wait. However, automation, space, right? Those seem like they're like this next AI thing to hit. So it's a good one to keep an eye on. Double bottom here at 18 and then ripped to 46. Crazy, crazy. NXE. Yeah, near all-time highs. It's what you want. Nice, solid long-term uptrend. Again, it's what you want. We look at the daily chart. Pretty crazy. This is a volatile one. Crazy 70% move higher, but has been consolidating for a little bit here, so could continue to potentially push higher. We need to see a break of, say, 7. If we can get through 7, that's interesting to me. That potentially could get us to 8 or 9. This looks like a pretty kind of long-term bull flag, which is all good. However, everything's moved so big. Technical analysis is really hard around this time. And the reason for that is because, so one thing that us as technicians really look for is we look for relative strength. And simply put, you want to buy the strongest stuff. And there's a lot of evidence for that you want to buy the strongest stuff. You don't want to buy the weakest stuff. You want to buy the strongest stuff. A lot of evidence for that. Academic studies, hedge funds, a lot of paperwork out there. Don't give me the weakest space name, give me the strongest space name, because if space continues, that's probably going to be the one that does the best. So with the market doing what the market's done, it makes it hard to do analysis in the market because one of two things has occurred. One, your stock has gone up with the market, right? In which case it's overextended, right? They like that NXE and SYM and a lot of these names. Your stock has participated with the market. The market's gone up in a straight line. Your stock has also gone up in a straight line. Good for you if you own it. Congratulations. However, it's now overextended. Or the other scenario is your stock hasn't gone up with the market and the market's gone up in a straight line. So now you're relatively weak. Your stock is not participating in the broad market move. So it kind of puts you in this area of, if my stock's gone up, then it's overextended and I don't really want to buy it here. And if my stock hasn't gone up, it's relatively weak to the market and I probably don't want to buy it here. So this is why, myself as a quant and everything, I'm kind of fully invested as is. I'm just kind of riding whatever happens. But yeah, it just becomes very, very hard to look at some of these stocks. That's why, again, I'm not like glazing over them. It's just that GXLY. Nope. That's not a company. MBIS. Ooh. Crash from 87 bucks down to 14. Ooh, something bad happened there. What do you do? Provides infrastructure services to AI builders worldwide. Oh, they got the AI in the name. This would worry me. Obviously, I would look into whatever caused this this insane collapse in the company, down 85%. That would worry me. However, we're grinding back up. If you kind of cut that part out of the chart, it looks pretty good here, doing a kind of cup and handle type play. But something really bad happened, and just by looking at it, could be like DOJ something like that. That's the kind of thing that worries me. However, it's like we talk about, can the company, if it has something disastrous, can the can it be one of those things in which they turn it around? And sometimes they can, and sometimes those are the best companies, that they have some sort of disaster. I don't even want to say it, but SMCI might be one of those companies. I don't know. But they went from 120 down to $17, and they've been holding strong. So they had some accounting legal stuff and maybe turning that around. So yeah, that's the kind of what if scenario that I want to take a look at, is what happened to NBIS in order to have them crash 85% in like a month. GLXY. Galaxy Digital. It seems like I got something drawn out here already. That's a nice looking chart. That's a nice long-term massive saucer. Right. And there's one of the sayings I love in trading is, the bigger the base, the higher in space. Could we be doing that? Right, where we have this really long-term base, and then now we've got a little consolidation right at the end of that base. That looks interesting. I drew a VWAP from there, but yeah, you could draw it from pretty much anywhere, slow volume. So that's good. That to me looks way better than this last one. But it's a nice looking saucer. It's a huge saucer all the way down and up. When I hear digital and I see finances, this makes me think crypto. And all of this crypto stuff engages in digital access data center infrastructure. So when you're looking at these, you need, and I don't like all of these companies that are doing the crypto treasury, like you're tying yourself to the fate of an incredibly volatile asset. So yes, that chart looks good, but if Bitcoin does not make this new all-time high break and make it relatively soon, then a lot of these companies, I think, are going to start having problems, because what they've done is they've taken out debt to buy crypto. And if crypto goes down, they can't sell any of that to repay their debt and then have crypto. So it becomes an interesting, let's say, conundrum. Could be more Ponzi-like in its nature. So just be careful, right? All of these crypto treasury ones, whether even if it's something who has like a reputable name like Tom Lee in it with this BMNR, they're all going to get tied to crypto. Now, if we are past the days where crypto tanking, 75, 80% regularly, if that's done, then these things make a little bit more sense, and it might be something that you potentially want to take trades on. But anytime you hear, right, digital assets or crypto or any of those things, I think you just have to be very, very careful and keep your eye on the Bitcoin chart, because even if you don't trade Bitcoin, it doesn't matter anymore. So many of these companies have their foot in the crypto door that they have to do something. Bitcoin has to, at some point, break out to highs because they need to refinance this debt in order to have this absolutely make sense. So again, just make sure that you're looking to do that. And this is the last little rant before we go, is it looks like we bounced and we may continue lower here on the S&P 500 and the NASDAQ and all that. Just know that it's healthy, right? They probably have a lot of people, if we're down 2-3%, maybe have a lot of people kind of panicking, trying to scare people. Just know that we're up an insane amount in 2 weeks, and if we pull back, that ends up being pretty much it's a good thing. It's healthy. It has to happen, right? So thank you guys, as always, for tuning in. Thanks for coming by on Monday. As always, I will see you guys on Friday. There's no holiday this week, right? Yeah. And I'll talk to you soon, and thank you all for the questions.